Welcome to my morning report charter analysis videos on Wednesday the 18th of May with me, Richard Pro Market Analyst at Antec Markets. We've got a slightly corrective open on the European session. We're sort of continuing this risk on, risk off moves that we've seen in the last few days really. We had some sort of positive US inflation data yesterday and a bit of positive signs in the industrial production as well. Both, well, certainly the industrial production beating expectations, and that has sort of helped to stabilise the dollar. And also the dollar was boosted by the sort of hawkish comments from FOMC's John Williams and Dennis Lockhart, both of which are hawks in any case, but still they were talking about 2, possibly even 3 rate hikes this year. I mean, 3's well, first time I've heard that in a while, but certainly 2 they seem to be thinking is a possibility. The Fed funds interest rate futures have improved on the back of that, up from 4% to 15%. But again, there needs to be so much more positive US data to really sort of cement in any expectations of a realistic expectations of a rate hike anyway. So that seems to be the case today. So we're seeing dollar strength. And let me just find my dollar chart. Here we go. The Treasury yields pulling higher is an interesting one. Treasury yields, 2-year Treasury yields, sharp gains on 2-year Treasuries yesterday. Even seeing minor gains on the 10-year Treasury as well. So they are certainly factoring in sort of the improvement that we're seeing in these rate expectations. But is it going to really materially change the outlook? Well, we're seeing the dollar strengthening today again. Euro is, well, the dollar is actually stronger against all the forex majors today, and about 0.5% actually on the euro. So that is certainly helping this recovery in the dollar continue. As to whether it can break through that key 95.2 level on the trade-weighted dollar remains to be seen. That is a key level that the market will be looking at certainly. But this recovery is continuing. The commodity prices are slightly, well, the oil price had been positive in the early moves, but just slightly off now, only marginally, about 0.2% on WTI. But the gold price and the silver price are sort of looking a bit more corrective as well, interestingly enough. So this stronger dollar is impacting through the markets and also impacting on equities as well. There is still the negative correlation between the dollar and equities over the long term, and certainly that is sort of really what we're seeing today. So what have we got to look forward to today? Well, we've got the Fed meeting minutes tonight. That will be the main market focus for today. Fed meeting minutes, certainly on the back of that announcement in April that the Fed didn't change monetary policy, and there was no real expectation of it doing so, but still the markets will be looking out for the sort of signs of possibility of June. And as I said, the Fed members recently have been all lining up sort of behind each other, sort of to try and come out with suggestions that 2 rate hikes were possible. Now that would obviously mean possibility of June, but we'll probably need to see signs in the Fed minutes, because the Fed does not hike interest rates without signalling, or historically certainly hasn't done. So you'd look for signs in the Fed meeting minutes to suggest that there was going to be some sort of possible rate hike in the next meeting, and unless there isn't, I think the market could sell off. So it'd be interesting to see that. That's tonight at 7 o'clock. But before then, we've got a whole load of data actually. The UK unemployment data, 9:30. Unemployment expected to stick at 5.1%, but the interesting factor will be the average weekly earnings, which are expected to improve slightly again to 2.3%, and that comes on the back of CPI, which fell unexpectedly yesterday, so that would suggest that real wage growth is coming back into the system. And then this afternoon we've got 10 o'clock we've got the Eurozone CPI data, which is expected to fall back, confirm on the flash reading was minus 0.2%. It's expected to confirm that in the final reading today, minus 0.2%. And then later this afternoon, we've got the EIA weekly oil inventories, which is expected to do another draw of 3.1 million barrels. So if that were to be seen, certainly that would help to support the oil price once again. But as I said, the focus will be on the Fed minutes tonight. So that takes me to my chart today, which is the euro sterling. Now, euro sterling is interesting because I'm sort of zooming back here and look at this possibility of a top pattern here. Big head and shoulders top. Is that building? But look at these momentum indicators. The RSI having rolled over is rolled over again. The stochastics crossed over, sell signal. MACD lines failing at the neutral level. We're now trading back below the 89-day moving average, which that hasn't happened this year since early December. So a lot of these signals are pointing towards a deterioration in this once again. Now, we had this recent consolidation. We've now broken below the low of that consolidation. That sort of consolidation was finding support around 78.50 area. That sort of broke below that yesterday and confirmed it with a closing break and continued today. So it looks as though that we're sort of pulling back towards that that key low that we saw back in late April, which was 77.30. So you're seeing a succession now of lower highs, and it's almost accelerating lower as well, isn't it? The succession of lower highs is accelerating. Yesterday's spike high, 78.55. Again, that was around that old resistance, wasn't it? Sorry, that old support, which has now become the new resistance. So around this level here, if my crosshair would work. No, why would it work? There we go. So yeah, around that old support was yesterday's spike high. So that's interesting in itself, the fact that we've fallen away again. Look at these momentum indicators on the hourly. Successive lower highs on the RSI and MACD lines and stochastics. It's all looking pretty corrective, isn't it? And I think it looks like we're going to be coming back towards that 77.30 level, and possibility of this big head and shoulders top pattern forming and completing. But that's for the days and weeks ahead. But it'll be interesting to see if it happens. So that would suggest also, just as a bit of a caveat, as a bit of an aside, that that would suggest that the market is still sort of moving towards more of a UK Remain vote in the EU referendum. Certainly, if that were to be seen, you'd expect to see the euro sterling sharply lower in the coming months. So I wish you good luck in your trading today, and I'll speak to you later.